This was an interview with investor Neil Mehta of Greenoaks Capital. I believe he does very, very few interviews, and this was unique that he did this long form interview, which I'll link down below in the description of the video. But it was such an impactful interview for me, and so much of the way he thought about investing aligned with my own thinking. So I wanted to give you guys some of the highlights I found from that interview and connect those highlights with the Lemonade investment, why I am invested in Lemonade. So let's dive in and listen to the clips, and I'll give my own take.
Where we could generate alpha, where we're sometimes differentially great partners, is by having a deep understanding of the business model. So in the case of Coupang, in the case of most of the businesses we invest in, we lead multiple rounds in. It's never up and to the right. Oftentimes in internet and technology, good businesses are hidden in bad P&Ls. Not everything works right away, but things are going really fast. And people sometimes think Greenoaks is like looking for momentum or forward progress. Actually, we're happy with volatility. It's kind of counterintuitive. Like volatility is something like we're very open to, and we're open to it because when there's moments of high volatility, it's a lot harder to understand what's happening to a business, what's happening to a market, and so we will follow great founders into their businesses. And there'll be moments where the businesses do not feel all that great. I mean, I can't, across the portfolio, there's been, I think without exception, there's most of the businesses we've been invested in for more than 5 years have gone through a rough patch or two.
Oh, there's so much we could say about Lemonade just from this one little clip. First of all, of course, Lemonade is a very volatile company and volatile stock price. And just that volatility, even in itself, brings tremendous opportunity if there's a misunderstanding in the market and a misunderstanding potentially for a long span of time. And then we as investors can understand and look a little bit deeper and understand the actual picture with more clarity. Then it doesn't really matter. Then the volatility is not as stressful. It's more of a feature, not a bug, because it can actually give more opportunities for a longer span of time to be purchasing shares with, cash flows from your own investments into that investment. And the biggest misunderstanding, I think, for Lemonade is I say this again and again and again in my videos, and I see people on the wrong side of this misunderstanding this again and again and again on the bear side of Lemonade, is they don't understand that as Lemonade is ramping up their growth spend and marketing spend, that's going to hurt their quarter by quarter profitability and their quarter by quarter P&L statement. They're ramping up and spending aggressively on growth because they're not concerned. They don't care about the quarter by quarter results. They're worried about the results 3 years from now, 4 years from now, 5 years from now, 10 years from now, because they know they can continue to invest heavily right now, or more aggressively than maybe the market thinks they should, but aggressively grow. And for every dollar they're spending to grow, they're going to get $3, $4, $5 back, maybe even more than that back in profits later on. Those dollars come back over a span of time. So that is the number one thing that I see the market misunderstanding about Lemonade. And then, of course, that misunderstanding creates volatility in the stock price, and then volatility in the stock price creates opportunity for us as investors. Of course, there's other misunderstandings as well. People think the AI that Lemonade touts is just a buzzword and not a real competitive advantage that will stack up over time. People think they're just this woke company that's all woke driven and has no backbone or really a push to drive things ahead. I don't think any of these misunderstandings about Lemonade are true, but they are what in part I believe drives the volatility of the company and its share price.
I have a controversial statement, which is I don't think there are many truly amazing founders that are building bad businesses. I maybe ran into one or two, but they figured it out pretty quickly. I think that truly remarkable founders find their way into, because they think in terms of jaw-dropping customer experiences.
I love this term. I freaking love this term, the jaw-dropping customer experience, the JDCE. And in many ways, I think people make investing much more complicated than it really needs to be. Because if you can, like really all business is you have customers that have some problem or something that could be something in their life that could be done better, a good or service that they could buy to solve some problem that they have. And if a company can create a solution that meets the needs of those customers and solves that problem and does it in this streamlined, effective, customer-centric way, guess what? Those customers are going to love that product. They're going to come back to you. They're going to tell others about your product or service, and you're going to have more sales and drive more sales. Like it's really not crazy complicated. And what I love here about Neil and what he points out is that great founders are able to build great businesses, and great businesses are businesses that have a jaw-dropping customer experience. So great founders can build these great businesses, and these great businesses have at its core a jaw-dropping customer experience where the customer just loves this product or service. And of course, how this ties so strongly into Lemonade is Lemonade. If you read any of the content that Lemonade had published for investors, for the investing world, it was something that always comes through is that they're this customer-centric company. They're this customer-centric company. They're driven by meeting the needs of their customers and doing it in a way that's transformationally different from traditional insurance and how that product is typically delivered in the marketplace. And this comes through with Lemonade having a net promoter score they've cited in the past, a net promoter score over 70, similar to the likes of Apple and Apple products, extremely high net promoter score versus, say, I think industry average is much lower, maybe 30 for insurance. But Lemonade is focused on, at its core, is focused on creating this jaw-dropping customer experience. And I know recently at the London InsurTech conference, Daniel, in his talk there, he talked about how every single time they've created more automation via AI, via technology in sort of the customer experience stream of Lemonade, it's improved the overall customer experience, improved the net promoter score. So their use of technology to make this customer experience so transformational, I think is just an incredible sign of things to come for Lemonade. Of course, there's other examples we could give, how they pay claims, in a few seconds a span of time. They wouldn't have to. They could hold on to that money for longer and say, oh, it's minimum 1 week payout to be paid for your claim, or there's a cycle of 2 weeks minimum after, whatever it is. But they choose to be customer-centric and delight the customers. And that's only, in the short term, that might hurt you as you build the tech for that. It might take more criticism as you say, why are you giving back the money to your customers sooner, those kind of things. But in the long term, all of that's only going to help you and your business in the long term, the long span.
I'll give you a battery of things I'm looking for. But if you put a gun to my head and you said there's only one thing you could have asked this company or the people at this company, and I never actually ask it, but I always think about it right away, is I when I visit a company and I watch people and I meet people, I'm trying to evaluate just one thing, which is if you polled everybody at this company and you asked them, are your best days ahead of you or behind you? What would the proportion of people say?
I absolutely love this question, and it's just a framework of thinking about whether a company is headed in the correct direction or not. And obviously, if you could actually poll, or if you actually asked everyone in a company whether their best days are ahead of them or behind them, in order for them to answer that question, they need to take into account a multitude of factors that they would filter in through their mind about where the company's headed and what direction they're headed in and how things are progressing and what kind of leadership they have and are the products incrementally getting better and can they see the path ahead of all the improvements they can make to make the entire company and the entire customer experience better and better. Do they have a competitive advantage over the companies, their competition, and those around them? So in a sense, having a sense of what people feel about a company or investment takes into account all of those little details that would be deeper below the surface of what that question is. But for Lemonade's sake, that question, if I was a Lemonade employee or as a Lemonade investor who's watching the company closely, I would say was such a resounding yes, that yes, the company's best days are ahead of them. They could literally grow, they're going to grow. They've forecast to grow for 30% a year roughly for the next number of years. And even after they do all that, say they do that in 8 or 9 years, they 10x their book of business, they still would have tremendous, massive upside and potential growth ahead of them when you consider the massiveness of the worldwide insurance market and how small they would still only be at, say, a $10 billion book of business IFP. And then you look at so many other factors, such as how they're just only beginning to roll out car. They're making the car customer experience better and better, and they're still learning so much about that product and will be just beginning to cross-sell that product to their existing customers. They're only like 4.5% of their customers are multi-line customers across the entire book, and eventually they're going to grow that number to 25 to say 40% of customers. Then of course your best days are ahead of you. If you're a company built to implement the very best, latest and greatest applications of artificial intelligence, whether it's using AIs to answer phone calls and handling all the customer experience funnel and that whole side of things, or whether it's using AI to take into more and more variables around what a customer's risk selection, risk profile could mean, and then using that to price customers' risks more appropriately. Whether it's all of those things, there's no insurance company, I feel like, in the world that's poised to utilize those quickly and effectively and fully and with the depth that Lemonade would have. So are Lemonade's best days ahead of them? Oh, I think that question is just such a resounding yes. And I feel like if you asked anyone really in the company, you would get, maybe not anyone, but the vast majority of people that work for Lemonade, I believe you'd get a resounding yes, that yes, our best days are ahead of us. We're just really in the early innings of what this company will look like and what it will mean.
When I spend time with a founder and I'm talking to them about their business, I'm trying to figure out, are they high focused, high ambition, determined? Do they have divergent thinking that allows them to see something in the world and in their business that other people would vehemently disagree with but is right? So it starts with the founder, the personality of that founder.
I believe Lemonade's founders, Daniel and Shai, really fit the description here of this divergent thinking founder that Neil describes. It's really not normal to start and have the vision for a grand, all-encompassing global insurance brand that's built from first principles. That's not just an upfront sales wrapper for an insurance product or a bunch of products, downstream of that. It's truly to own and control the entire top to bottom customer experience, the top to bottom entire company. And to think already years ago and build the company in a way that you're building towards this autonomous organization that could be this hyper efficient, hyper automated, super customer-centric way of building things and processing all things in a company and all value streams. That's very divergent thinking. And so there's clear examples of this, even my own discussions and talking with Shai and Daniel in person or through different interviews I've done. I think there's very, very clear example of this, that they are laser focused in the vision of creating this company, and they are very divergent thinkers in how they are building the company, and they've had those divergent thoughts since day one when they first went to the drawing board.
And I haven't been able to sit down and write on a piece of paper. I think every great founder looks approximately the same. Every bad founder looks different. There's some quote about happy families.
The Dostoevsky quote.
Yeah, yes, exactly. But I do believe this is controversial. I do believe there's an archetype for a great founder, and I think that once you see it and learn it, it's a repeatable process. And I think some of the things I mentioned are part of that. I think that you're looking for usually someone that's built a jaw-dropping customer experience. We're looking for defensibility in that. What technical or operational trade-offs have you broken that allow you to have the early signs of a moat? We're looking for competitive advantage. You have network effects, shared scale economies, counter-positioning, cornered resources. These are just adjectives we use to describe the characteristics of a business that allow it to produce unfair amounts of free cash flow over a sustained period of time.